In this video, I want to discuss the recent carnage in the uranium mining sector. But first, I want to discuss the concept of managing losses in your trading, which is really the most important aspect of trading. In my view, there's three ways that people go about managing losses. The first is to have a goal that every loss is a manageable loss. This involves actually having a plan for taking losses, and the plan details a method of really never having a blow up because all losses are within a certain threshold. The second way is to kind of have a mix between manageable losses and losses that get away. These type of traders would probably have a general idea of where they should be taking a loss, but they don't have a real specific plan for taking losses. And this leads to occasional blow-ups because eventually they get stuck in a situation where they take big losses and hold on to positions too long where they should have been taking losses earlier. And the third type of trader is someone that has no risk management whatsoever. They have no plan for doing anything else but winning in the markets, and it's only a matter of time before they have a major blow up. Now, an important point here is that really the only way to get knocked out of the investing game is to lose big, because losing big involves losing not only your physical capital but your psychological capital, which is arguably just as important as the money you lose, because both of these things prevent you from getting back into the market and capitalizing on the next big opportunity that comes around. And even from my own personal experience, taking a big loss psychologically can take a period of time to overcome before you're ready to really jump back into the markets. And the reason why I separated the above three statements into two groups is because I believe that the goal of a profitable trader and someone who's successful in the market should be to achieve number one here, and someone that struggles with the markets and eventually has a big downturn is really someone that follows kind of the second or third strategy. So in my own trading, I strive to achieve number one, which is to have a plan for taking losses, which allows me to never have a blow up, and then that in turn allows me to be around for the next big market opportunity that occurs, even if I just came out of a period where I had some losing trades. Now, one of the problems that I've observed a lot of people have in the markets is that people like to marry their stocks, and they come up with a fundamental conviction of why to buy something, and they kind of take it personally when they happen to be wrong, and they make it a lot more personal than it should be. And a reason that I've gravitated towards trend following with stage analysis is that it really doesn't matter what I'm trading. And what I've come to learn for myself is that the more I'm kind of divorced from it, the underlying thing that I really should only care about is whether the stock or the market is in a bull market. And my goal should be that no matter what the fundamentals are, whatever fundamentals someone tries to present to me or whatever I learn on my own, I need to avoid bear markets, because bear markets are what lead to big losses. So taking all this in stride and looking at the uranium mining sector, we had a big move down in the uranium mining stocks over the last 2 weeks, and more specifically last week, a lot of these stocks took some heavy losses. I had some emails from people that come to my website that were asking me about whether the uranium miners should be in stage 4 now that they've broken down below the 30-week moving average. Well, the answer to that is in stage 3, before an official stage 4 takes place, the price action can go below the moving average, but really what happens in stage 4 is the moving average starts sloping downward. So even though the price action is below the moving average now, you can still be in stage 3 for a little while before a downtrend really starts. So that's why the stage analysis screener has most of these stocks in stage 3. If you go to the uranium page on the stage analysis screener, you'll see that 46% of uranium stocks are now in stage 3 and only 17% are in stage 2. So there's been a dramatic change in these stocks over the past couple weeks, and most of them have transitioned into stage 3 and are considerably under their 30-week moving average. Looking back at the chart of URA, where do the uranium miners go from here could take multiple different scenarios. It's possible that last week's major sell-off was the end of this big pullback over the last couple months, and a resumption of the stage 2 bull market could take place even though we had such a big pullback. Or you could see the uranium market transition back into stage 1 if pressure on the commodities markets continues, which has really been kind of a theme so far in 2017. You've seen pretty much pressure all over the commodities markets, which is one of the reasons why I think the uranium stocks have struggled so much since the big rally to start the year. And finally, you could actually have a stage 4 or resumption of the stage 4 bear market as well, even though in my view that kind of seems like the least likely of the scenarios given the depth of the uranium bear market and given the fact that it moved into a stage 2 move so aggressively earlier this year on heavy volume. But regardless of anyone's views, it's possible for the market to do anything. And one of the reasons why you could even see a stage 4 is something that I've been taking a look at this week, is what's going on in the Canadian housing market. And it appears that a lot of the mortgage lenders in Canada are having serious problems right now. This is one of the biggest mortgage lenders, Home Capital Group, and you can see this massive decline over the last few weeks, and really a very ugly decline last week. And obviously, having gone through 2008, we saw this type of thing happen with a lot of lenders and banks, which led to actually a collapse in the stock market. And I'm not saying that that's going to happen again, but you never know. You never know how much counterparty risk is tied to the Canadian housing bubble and where this could lead into. We saw when Bear Stearns crashed, a lot of the commodities markets were still doing well in 2008, but a few months later everything started crashing when the dominoes started falling. So these type of black swan risks can always be out there in the markets. It can always push a market back into a stage 4, even though it looked like it was actually going to break out into a bull market. Now, looking at the uranium miners from a stage analysis perspective, really what we've seen so far this year is, I think everything that's happened, it looked like a pretty solid stage 2 breakout, and then unfortunately we've just had a move back below the moving average and potentially a negation of the breakout. But really, identifying what happened earlier this year as a stage 2 breakout, I think was the correct call. And then obviously when the market goes against you, your job is to manage risk and not take big losses. So going back to what I was saying earlier, if you're managing your trades and you have a plan for taking losses in your trading, I think you're doing the right thing and you're going to be a successful trader. But if you don't manage your losses, then eventually you're going to lead to a blow up, and that's when you get into real trouble in trading. And don't take my word for it. Also, I came across this on Mark Minervini's website, where he says that most investors are simply too slow in closing out losing positions. As a result, they hold on to they hold until they can't take the pain anymore, and that eats up precious capital and valuable time. To be successful, you must keep in mind that the only way you can continue to operate is to protect your account from a major setback or worse, devastation. Avoiding large losses is the single most important factor for winning big as a speculator. You can't control how much a stock rises, but in most cases, whether you take a small loss or a big loss is entirely your choice. There's only one thing I can guarantee. If you can't learn to accept small losses, sooner or later you'll take big losses. It's inevitable. I mean, really, this whole paragraph should be printed out and tucked away in your trading journal, because this is exactly what separates people that end up being successful in the markets and people that struggle, is turning small losses into big losses. So if the uranium miners do continue to be under pressure and continue to move lower, I will be exiting my uranium mining stocks that I still own and taking losses on those positions. And there's nothing wrong with that, because even if uranium stocks do put in a bottom, you can always buy back in as they base out and launch back into an uptrend. And one of the things that taking or getting out of a stage 4 allowed me to do last year, which pertains to the gold mining stocks. You can go back to my YouTube channel and look at a lot of my past videos on the gold mining sector from 2016, but I talked about the upcoming stage 2 breakout in the gold miners, before it happened in 2016, because of the depth of this bear market. And you know I did really well trading gold stocks last year, but once they started to kind of break down, and this kind of took me by surprise. I didn't really expect this bull market to have so much trouble so early, but once it did, after I exited my gold stocks, it allowed me to capitalize on other opportunities in the market while the gold stocks had a lot of trouble. And you can see that it's been hard to make money in gold stocks ever since they broke down early last fall. But one of the stocks that allowed me to get into was Northern Dynasty, which around the same time that the gold stocks were breaking down, this predominantly copper mining stock, and a lot of the copper stocks actually started going up very strongly. And this was actually one of my biggest winners from last year. You can see how it broke out of this stage 1 base on huge volume and then consolidated, and I got in more here and obviously rode a nice uptrend. So going back to what I talked about to start this video, I'd highly encourage you to take a look at what people like Mark Minervini and Jesse Livermore and other great traders have said, in a lot of great trading books, about taking losses and how it's really the most important part of being a successful trader. And hopefully you can take this information and improve your trading for the future.